Did you know that investment banking giant Goldman Sachs believes that Tesla is a huge buy right now? Numerous investors, including Goldman Sachs, remain bullish on Tesla stock and are confident that their investment will pay off well. Stay tuned and keep watching to learn more about this. It comes as no surprise for Tesla to become one of the hottest stocks in the market today, despite several claims that the EV maker's stocks are extremely overvalued. Still, many others believe that Tesla stock is worth every penny, and others even claim that the company's stocks are in fact underpriced. Today, you will find out why you should buy Tesla stock right now, according to Goldman Sachs. Tesla stock is a big buy, Goldman Sachs says. Wall Street is getting more bullish about Tesla stock, but greater optimism among analysts hasn't been enough to lift the price, given the fear of higher interest rates. Earlier in the year, Goldman Sachs analyst Mark Delaney increased his price target for Tesla stock to $1,200 from $1,125, while maintaining a buy rating. Delaney also named Tesla a top pick for 2022. In March, Goldman Sachs picked Tesla and several other EV-related stocks to play a greenflation trend and rising oil prices. The bank's analysts give most of the stocks 50% potential upside or more. In fact, according to Goldman Sachs, electric vehicle innovation will continue to drive growth for investors in 2022. As early as 2016, Goldman Sachs said it was time to buy Tesla stock. In 2016, after 3 years of saying just wait for it, Goldman Sachs said that it was time to go in on Tesla Motors. In the said year, the investment banking giant upgraded its recommendation on the stock from hold to buy, while maintaining a price target of $250, which sent Tesla shares up in early trading. Prior to that, the last time Goldman gave Tesla a buy rating was in February 2013 with a price target of $45. Today, once again, Goldman Sachs says that Tesla stock is a big buy. The Goldman Sachs Group Inc. is a leading global financial institution that delivers a broad range of financial services across investment banking, securities, investment management, and consumer banking to a large and diversified client base that includes corporations, financial institutions, governments, and individuals. Founded in 1869, the firm is headquartered in New York and maintains offices in all major financial centers around the world. Goldman Sachs' mission is to advance sustainable economic growth and financial opportunity across the globe. Drawing upon over 150 years of experience working with the world's leading businesses, entrepreneurs, and institutions, we mobilize our people and resources to advance the success of our clients, broaden individual prosperity, and accelerate economic progress for all. Tesla shares are up 12% in the last 3 months, handily outperforming the S&P 500's nearly 5% decrease over that time. Wall Street credits the push higher in Tesla shares to optimism around new government legislation that will support the adoption of EVs in 2023 and beyond. Tesla's strong execution in the first 2 quarters of the year has also significantly won over the bears. Goldman Sachs analyst Mark Delaney believes there is more upside to Tesla despite the stock's rise. Delaney's take comes after a meeting with Tesla's head of investor relations, Martin Vicha. In line with that, Delaney set a price target of $333.33 with a reiterated buy rating and assumed a plus 22% stock price movement. There are 3 major takeaways Delaney noted in this regard. The first one is that Tesla's costs are headed lower. Tesla's automotive cost of goods sold per vehicle fell to about $36,000 in 2021 from over $70,000 in 2017. While this metric increased in the second quarter driven by factory shutdowns, factory startup costs, and input cost pressure, the cost of goods sold per car can trend lower over time as Tesla benefits from the ramp of the Berlin and Austin factories and the reduced percentage of vehicles coming from Fremont, which is a converted ICE factory with higher costs than Tesla's purpose-built EV factories, scale, and vehicle platform and battery improvements. Second, Tesla is a winner of the Inflation Reduction Act. It's too soon to say what impact the Inflation Reduction Act will have for Tesla, and a lot will depend on guidance from the government about how the law will be interpreted. However, we note that the IRA does seek to encourage a North American-based EV supply chain, and Tesla has more local manufacturing than average, with Model 3 and Y recognized as the most American-made vehicles per media sources, and we believe this will be a positive for Tesla to potentially qualify for at least partial credits on some vehicles over time. and Tesla could potentially benefit as well, in our view, from incentives for solar, batteries, charging, and commercial vehicles. Third, tight EV supply supports higher prices and profits. Tesla believes that consumers will increasingly move toward EVs similar to other technology inflections, e.g. CRT to LCD TVs, and feature phones to smartphones, but the EV industry could be supply constrained over the intermediate term as the new battery component supply and assembly takes time to ramp up. Do you think Tesla stock is indeed worth buying today? Let us know in the comment section below. Now, the question is now really a good time to buy Tesla stock? While it may be true that Tesla stock trades at an expensive price tag, it may be more deserved than some investors realize. Indeed, the valuation looks quite reasonable next to the company's attractive combination of a healthy balance sheet, pent-up demand for its vehicles, and soaring revenue. Yes, measured by traditional valuation metrics like price to earnings and price to sales, Tesla shares look expensive on the surface, but the stock trades at such a steep premium for a reason. Undeniably, Tesla has strong fundamentals. In fact, it will prove difficult to overstate how attractive Tesla's fundamentals are. For one, the company's balance sheet boasts $18.3 billion of cash and cash equivalents. Trailing 12-month free cash flow is also impressive at close to $7 billion. That's up from about $5 billion in 2021 and just $2.7 billion in 2020. Moreover, the company's sales are also soaring. Trailing 12-month revenue is $67 billion, up from about $54 billion in 2021 and close to $32 billion in 2020. And management expects strong growth to persist. Indeed, management has repeatedly guided production and unit deliveries to increase at an average rate of about 50% annually for the foreseeable future. And with delivery windows for new Tesla orders on the company's website pushed out to as late as April of next year for some models, demand certainly remains robust, a clear indication that Tesla management isn't bluffing about its sales growth expectations. It is also worth noting that while Tesla has achieved a significant annual revenue level, it could be argued that the automaker is still just getting started. Tesla management has always viewed the market for gas vehicles as its addressable market, not the niche market for electric and hybrid vehicles. And given the way essentially every major auto manufacturer is now leaning into electric vehicles with heavy investments, this view of Tesla's addressable market is looking truer than ever. According to estimates by J.D. Power, global vehicle sales are estimated to be about 80.8 million in 2022, which is without question a year that new car sales have been hampered by global supply chain challenges. Showing just how much room Tesla has to grow, the company's 2021 unit deliveries were under 1 million units. Still, Tesla CEO Elon Musk said in the company's most recent annual shareholder meeting that when new car makers ramp up their advertising for their electric vehicles, it actually helps demand for Tesla's vehicles. Electric vehicles are still so early in their adoption that lack of awareness may be the primary factor holding sales back. There is also the potential for Tesla's fast-growing energy business. Musk said that he thinks its energy business could eventually rival its automotive business. Overall, this is Goldman's investment thesis on Tesla. We believe that Tesla, given its leadership position in EVs, including its vertical integration and tight coupling of hardware and software, as well as its ecosystem of charging stations and brand, and its focus on clean transportation more broadly, given its solar and storage businesses, is well positioned to capitalize on the long-term shift to EVs. We expect Tesla to expand margins in the intermediate term as it ramps the important Model Y product, as well as new factories in Berlin, Germany, and Austin, Texas, and in the long term, as it increases its mix of software revenue. Although not everyone may agree with this, Tesla proves to be a force to be reckoned with in the electric vehicle industry. Tesla CEO Elon Musk is confident that in the coming years, along with the production of the much-awaited Tesla Cybertruck and humanoid robot Optimus, Tesla will remain at the top of its game. Make sure to hit the like and subscribe button and watch our other videos for more Tesla stock content.